What do I need to do if I want to buy an investment property and or a second home? Are you dreaming of owning an investment property or a second home, but you're not quite sure where to start? Well, you're in the right place. Today, we're going to walk through 5 key steps to help you decide if you're ready to purchase an investment property, which is often called a rental, or a second home, which is often referred to as a vacation home. My name is Gavin Sessions with Loans Made Simple. If you're curious to learn about all things related to mortgage and home loans, subscribe to our channel. We post new content each week. If you're ready to get qualified for a home loan or you're looking to get connected to a great real estate agent, our contact information is in the description below. All right, so as I mentioned, we're gonna highlight 5 key things that we think you need to know. So let's jump into number 1, which is know your goals. So people often invest in rental properties to generate a consistent passive income stream by collecting rents from tenants, which can help you build long-term wealth and provide you financial security and likely help you benefit from tax deductions related to property ownership and depreciation. Or maybe you find yourself vacationing in the same place year after year, or maybe even more frequently than that, just depending on how often you get away. But maybe you're tired of staying in hotels. Those can get expensive, or you're tired of renting someone else's Airbnb and are dreaming about owning your own. Well, I'm curious to know what your dream location is, so message us below. All right, so as I've said many times before, the first thing that we need to do to identify whether or not an investment property or a second home is right for you is to identify the purpose for the property. So once we know that, it's gonna be easy for us to determine the right loan options and strategies for you. So which one is it for you? Are you looking to buy an investment property to diversify your investments and start to build a portfolio of rental properties to drive income? Or are you looking to purchase a second home to be used as a vacation home that maybe you might rent out to friends and family or others short term? Well, let us know, shoot us a message. We'd love to understand what your goal and plan is. All right, so now you understand your goals and your purpose for the property. Now it's time to review your finances. So investment properties and second homes, they require larger down payments than if you're buying a home to occupy as your primary residence. And those down payments range from 10 to 25%. And the reason that you're required to bring a larger down payment is because loans for those properties, for investment properties and second homes, are statistically more risky. And that's simply because if push came to shove and you found yourself in a situation where you were short on cash, which home payment are you not going to make, right? You're probably not going to displace yourself and your family in favor of keeping your second home and your investment property. So typically, if you're short on cash, you're going to make that payment for the primary residence, which means you may skip the payment on your investment property or your second home, which could, of course, lead to foreclosure, as you likely know. So that is really the basis why that you're going to have a larger down payment and usually stricter credit qualification requirements when buying an investment property or a second home. So that being said, loans to purchase these types of properties, they come with stricter qualification requirements, and it's essential to have a strong credit score, stable income, and enough cash to support the down payment, the closing costs, and any reserves that you might need to purchase one of these homes. All right, so we just mentioned credit scores, and first we'll look at investment property credit score requirements. So Fannie and Freddie, they are in charge of the secondary market. They create the guidelines for conventional home loans. They allow for a score as low as 620 if you're gonna buy an investment property. But as we always say, it's super unlikely that you're gonna get approved for a conventional mortgage with a score that low. Now, that is not always the case, right? You may have a substantial down payment, maybe larger than 20%, maybe as much as 40 or 50%. And oftentimes bringing that additional cash to the table, in other words, more skin in the game, is going to help mitigate that risk for you. But that being said, I would always aim for a minimum credit score of at least 680 if you're shooting to get qualified for a conventional mortgage. All right, so second homes also have minimum credit score requirements that are slightly higher than an investment property. So Fannie and Freddie are going to allow for a score as low as 640. But again, I think it's unlikely you'll get qualified with a credit score that low unless you have a super substantial down payment. So if your score is 640, the minimum down payment you can bring is 25%. Now, second homes do allow for a down payment as low as 10%, but in order to bring that small of a down payment, you're going to need a credit score of at least 680 plus. And as I just mentioned with investment properties, it's unlikely you're going to get qualified for a conventional loan with a credit score of less than 680. It certainly can happen with additional down payment, but unlikely. So target for that 680 score or better. So credit scores can drive this, but when it's all said and done, so can your down payment, right? So if you have a greater down payment, you can offset a lower credit score, right? If your credit score is higher, you probably could get qualified with a lower down payment. So it's kind of 6 one way, half a dozen the other. Hey, it's Gavin here. Just wanted to take a moment. If you are ready to take the next step to purchase or refinance, click the link below, fill out our form, and we will get you connected to our pre-qualification team. So we haven't mentioned this yet, but part of the process is to review your debt to income ratio, and it's best that you keep that debt to income ratio under 43%. Now, It's okay if it flexes a little higher. And again, we're going to lean on those automatic underwriting tools to tell us if your loan is qualified or not. But the higher the debt to income ratio, the less likely you'll get approved. So debt to income ratio is very simply the minimum monthly payments added together that show up on your credit report divided by your gross monthly income. And that would include all of your mortgages and any prospective mortgages that you're looking to take on to purchase the subject property. All right, so I've already mentioned automatic underwriting tools, and we'll lean on those here again to talk about reserves. So reserves are something that you'll most likely be required to have. And I would plan for at least 6 months of reserves if you're going to buy an investment property or a second home. If you have a portfolio of rental properties, it's possible those automatic underwriting findings are going to require that you have reserves on any of your other rental properties as well. So best to have at least 6 months of reserves for the subject property. All right, it's a great place for us to pause and just mention that since we talked about credit scores, you may want to go watch this other video right here called What is a Credit Report? All right, so moving on, it's now time to get pre-approved. And don't worry if you're not super familiar with all of the numbers that we just discussed above. That is not your job to be an expert on that. But the next step for you is to get connected with a great loan officer to help you get pre-approved. And our team would love to help with that. So getting pre-approved is a great way to prove to the seller of the subject property that you're interested in that you are a serious buyer, and showing them a pre-approval letter does exactly that. So we just kind of discussed the elements of getting pre-approved with credit, with income and assets. So we're going to verify all of those during the pre-approval process to determine what your purchasing power is and how much money you're able to borrow for your loan. This is also going to empower you with super crucial estimated payment information as well as cash to close estimates that you need to know before you go out and fall in love with a home that might be out of your price range, or maybe it's just more than you want to spend. All right, so here we are into step 4, which is understanding the loan options. And you're likely familiar with all the major loan products out there, such as FHA and VA and USDA and conventional. And you've probably heard of Fannie and Freddie and all those things. But one thing I want to make super clear to you right here, you can only use a conventional mortgage to purchase an investment property or a second home. You cannot use government-insured home loan products like as FHA or VA or USDA to purchase anything but a primary residence. Again, FHA, VA, USDA, great products. We love them. We've got films on all those products, but they can only be used to purchase a primary residence. Now, there's one exception. I'll get to that a little bit lower, so stay tuned. All right, so for a second home, you might qualify for a conventional loan with as little as 10% down. Again, that's going to depend on credit score and everything else we've already talked about, income, assets, credit, right? For an investment property, down payments are going to start a little higher at a minimum of 15%, and that's going to be for a single unit home. But it's going to increase to a minimum of 25% if you find yourself wanting to purchase a 2 to 4 unit property. All right, so I just gave you a teaser and I won't make you wait too long for it. What if you find yourself thinking about buying a multifamily property? So that's a 2 to a 4 unit property, but you think you'll occupy one of those units and then you're going to rent the other. So that's a fantastic house hacking method to help you build a rental portfolio of properties, because as long as you occupy at least one of the units, you can actually consider that to be a primary residence purchase, which means you're not subject to larger down payment requirements nor larger credit score requirements. So you could use an FHA loan, you could use a VA loan, you might be able to use a USDA loan, or you could use a conventional loan with primary residence down payment minimums, which can be as low as 3 to 3.5%. So fantastic way. If you're interested to learn more about that, scroll down, find our information, reach out to us, or leave us a comment. We would love to talk to you about that great house hacking method. So as we mentioned before, getting a loan to purchase a second home or an investment property is statistically riskier. And another way that that risk is offset other than with a higher down payment is typically with higher interest rates. So it's a bummer, but it is reality. So at the recording of this video, interest rates for second homes are super similar to rates for investment properties. And they're both typically higher than what you'd see on a primary residence, which sometimes by as much as 1% or more. All right, let's jump in here to step 5, which is our recommendation to work with experts. So buying an investment property or a second home should not be something you take on alone. We strongly recommend that you partner with an experienced local real estate agent, a CPA to help discuss the tax implications and benefits, and maybe even your financial advisor to ensure that this investment strategy is best for you, right? So if you don't have any of those great people in your corner, reach out to us. We would love to help get you connected to some great people in your local market. Hopefully you now have a great understanding of what it takes to purchase an investment property or a second home, and hopefully you've identified the purpose and the plan for that property. And my ask to you is, what is your goal? An investment property or a second home? And how can we help? For the next video, I suggest that you watch how to qualify for a loan, and that's right here. It's going to help you understand and continue your education of the home buying process.